Good afternoon and welcome to the end of day review for today. And today is April 11, 2024, and it's a Thursday. And it's a Q4. I mean, we say Q4 in the sense is the quality rate, but anyway, Thursday is the day after the CPI data, and actually it's the PPI data released at 8:30. And when we go into the charts, we can see that how the markets react to the PPI data, the opposite of the CPI data. So when the CPI data released yesterday, it dropped, but today the PPI data come out positive, so it's just reversal. That's amazing price action for today. By the way, we are in week 12. It kills us we mix both week 15, which is the second week of second quarter, and the 15th week of the year 2024. So 1 week we excuse us we mix both. 1 year we have 52 weeks right there. And for this week we have no option expiration, and so we just finished with the CPI data and PPI data release for today. And the next high impact news or medium impact news we are looking for is the GDP data in April, which is released on 25th, and we're gonna see how it works on the 24th. We already mentioned about this. Our model, we try to build a model before and after the new release, and then we have at the end of the month where FOMC meeting is very critical, because they're gonna announce whether they're gonna cut, in June, or maybe they announce in June. So let's see. So there's a lot of speculation around Fed cut rate. Everybody in the financial markets is waiting. It's the big huge impact news. And we're also looking for the non-farm payroll, which is next month. CPI data already released. So alright, before we go in today, we try to identify what is the profile model for this week. So far for this week, we see that the Wednesday it dropped, and it looked like this model perfect fix for this week, but a little bit confused right here by the bearish. But now we can understand bearish in the sense that the weekly candle, if we look on a weekly candle, it's the down close candle. That's why it's bearish. This morning when we look at this profile in the pre-market analysis, we a little bit confused, but now we double check, and we can see that it makes sense because the Monday open rate. So this tomorrow anticipate will be closed below, below the Monday open. So it's gonna be down close candle for the weekly. Let's take a look. Let's take a look before we go any further. But here's the 5-minute chart, which is only include the regular trading hours. It not include the pre-market, after-market, or another word for extended trading hour, which is stand for E. It stand for extended, T for trading, and our H, so basically ETH, right? So that's the whole idea right there. Basically, it's extended trading hour versus regular trading hour. You know the ICC use both to build different model. So extended trading hour and the regular trading hour. So we use two 5-minute charts. One is this one, which is just regular trading hour, which is RTH, and the other one we use this one we use is extended trading hour, is TR right there. So it's include everything. So if we look at this chart, we see the gap right there. That is because not include the pre-markets or after the markets. All right, so look at to see the weekly profile. So we see that the huge sell-off on Friday is non-farm payroll, right? And then Monday it kind of consolidate, and then we see on Tuesday is a manipulation, and then it's distribution at the last hour, and then on Wednesday it dropped. So it's another manipulation right there, and then today it got up, but it make a manipulation right here from 9:30 all the way to around 10:20. It rate the sell side liquidity, basically the low of the week, right? We thought that before coming to this today, we thought that Wednesday is the week low, but actually Thursday it make a manipulation move right there, the Thursday reversal right there, and then it closed the gap, but almost closed the gap. Still you see the gap right there, but it's almost it hit into a very strong resistance level, or you say demand right here. We mark right there is the supply. We misspoke right there. It's supply range right there on the high time frame, and that's where that's why we think that this model work well, this profile right there. But the difference is that yes, it fit perfectly. So this is a very typical for CPI data, I guess, right? CPI data, if it's positive, in this case negative, so it makes the move like that. But it's positive, it could be this one. So it's a classic weekly profile right there. And let's look at the weekly so we can have an idea that is if this model profile fixes. Yes, it is. So far here's on the weekly, we see that it's a down close. So basically if Friday is closed below the open here, what the open for this one is 52.63.25, 52.72, 52. What the high of the candle gives us is what the open 52.63, 52.63.25. Okay, let's look at right here 52.63. That's the Monday open right there. 63 around here. You see this one is 70, so 63 is below here. 68, 65 right there. That is the non-farm payroll on last Friday, and the Monday open 63. So Yeah, right here, it covered open right there. Very interesting. So this candle can, let's see, the 63 is 325. Why cow open right there, not right here? Okay, then look on the extended hour to see how cow the Monday open. So basically we have Monday right here. Yeah, it's open at this Q2. Not even close, but the 63 is around here. It got interesting how the weekly candle is aggregate. What the time that it count at open? Maybe I don't know, but right here it's the 63 level on the weekly candle. Very interesting. See that right here, the open right here. You see the open right there, open right there. Look at that. It will be yeah, 52.63. But when we look at the 5 minutes, it not match any candle. So we wonder how the computer, how the Thinkorswim, aggregate the data on a weekly. But that's another question right there. We don't have a time to go into that right now. But we got the roughly idea that does this model, this weekly profile fits so far perfectly for this week, for 4 days right there. And Friday is another function. So basically we have a quarter theory right here. So we have Monday is the accumulation, and Tuesday manipulation and sell off, right? Manipulation and then distribution, and then the quarter 4 is gonna be either reversal or continuation. And today the market shows us that it's reversal. It's a perfect fix for the model. So let's see what model we fit right here. Let's do some annotation right here. So
ICT weekly range profiles M2WTHF seek and destroy bullish, Friday seek and destroy bearish.
I guess that we hit the wrong bottom right there. So basically we want a tag file. We want to add it. What's that? No, add voice. Where is the text? Add it. No one add it with what's that one? Translate. Oh, right here. We hit the wrong one. So basically, what model we talking about right here? So we call this is weekly reversal. Oh, okay. So it's a weekly Thursday reversal. Thursday reversal. Oh, so there's this one or this one? I think it's this one. This one. Price run lower than overnight. Price can run on the high of day on Tuesday. Open, then go for half an hour in New York section. So model 1. So we give it the number, so we know that it's a classic Tuesday high. So we can call profile 2. So right here we have profile 1. So 1, 2. So basically today is profile 2, which is the classics. Usually at the highs of the week. Let's see if that's the case. So look at this regular trader. Yeah, we see the Tuesday right there. It make a high. You see that? It make the high. So it's the high of the week right there. And then Thursday it reversal. Few hour gap on Wednesday, but it's it's reversal. So basically, if tomorrow the Friday stay within this range, then it fit perfect with this profile. Basically, it stay below the close on Monday. So Monday is close at here, this level. So far we see that, wow, perfectly, you see that? Wow. We see that Monday close right there at that level. And if Friday is stay below that, then that fits does profile classical Tuesday low. Gives us Tuesday high of the week later. Alright, that's the review related to weekly profile. Now let's see what we see in here. So in here we see the hill run up. If we go with the extended ETH right there, we see the hill run up. It's Judas swing prior 9:30. Let's see if that model work for today. Basically we have a gap up, but that is a different chart. Let's look at the chart. Yeah, we see the hill run up. Right, hill run up right there. And yeah, but it did not run up, and it take the PM. Basically the PM high of the freebird there right here, the PM high right there. Oh, it run up, it take that. Wow, see that? That's where, yeah, we see that just around that. Let's look at the model again. So basically, two AM range. Oh, I see. Look for Euro swing. Before 9:30 and anticipate object direction. Target is the south side. So basically we see the run up right there. Here's the London. Okay, so basically the idea is right here. So this trend right there. So it did, the model did happen very accurate, and we missed. Did we? Yeah, we missed the swing swing down right here. We missed that move because we failed to recognize this model. Basically, it did rate the high of the London right there. and then we target the low exactly. It go to low right there, and then after that it reverse right there. So this model is work well for today right there. Model 2.1 right there. So we need to put that in out ICT model 2.1, which is a Judah swing. So basically, it a Judah swing before 9:30. It's worked. It worked perfectly for today, and we are missed that move. Let's see any note in here. Give us some clue. Target. So this model works well when we have 8:30 data release, like today, right? We have a CPI, not CPI, but PPI data, right? We have PPI data, and it's positive, right? The reading is 0.2, 1 point less than the consensus or expectation. So the hill run right here after at 8:30. So we can put the note in here. So next time we know. It fit with the weekly model, weekly profile, right? Here's the note we put right here. We say is work it try to keep it short. Refer to weekly profile. What the weekly profile? Number 2 right there. Profile 2. That's where we're gonna see that happen. So if if high impact SM high impact news release at 0:30, then we need to refer to that model. Let me see, can we can we make the size smaller? Oh, okay. Yeah, if high magnitude and I refer to profile, if high magnitude and I think and weekly profile. Match, right, with the condition, then we have a high probability setup right there, which is short at 9:30. That's the note right there we put for this model. If Heimbach News let's say Heimbach News release at 8:30, and the weekly profile number 2 match, which is match, exactly Monday to Thursday, and from Monday to Tuesday, Wednesday and Thursday, which is today, then we have a high quality right there, very high, properly set up. Too short at 9:30. Yep, that's the note we try to put right here. Yep. Oh wow, beautiful. Let's put it right here. Model 211. Beautiful. Model 1, model 2.1, and then we have a model 2.2, and then we have model 3.1. We put right here. So give us space to add our on node later. So if high impact, I think we high impact. So if high impact news, right? If high impact news release at 8:30 and a weekly for our match, then it's the added condition. We have a high property set up to show at 9:30, which is exactly today. Today we have it right there. We have it PPI data release. It rate it rate the low of the Wednesday. Here we can add right here. It will give us more detail. Release, especially if it's the sales liquidity of the week were rated. Then you have a very high quality setup right there. To add another condition in here. So if the high magnitude at 8:30 and the sales liquidity of the week right? So far, the sell side query of the week is the Wednesday low. And then that look perfect. In this case, is Wednesday low. Yep. So very concise, very detailed condition right there. So next time when we see the thread set up, this morning we're not sure that we don't pull the trigger to short them, but next time, next month, right? Grab here data next month, or other high impact news release. If we saw this setup, the high impact news fall on on this setup and the profile, weekly profile, then we have no reason not to pull the trigger. We pull the trigger right away. All right, so that's a beautiful thing we learned for today. Yeah, so we make the trade right here. As soon as it rate the London high, and also if we look carefully, we can see that is also rate the PM section on Friday, which is Wednesday. See that? As soon as it rate that, it show up right away, and we can short right at the open. Wow. Yep, right at the open. Let's put something in here so we can have an idea. Wow, exactly this level. Okay. Let's put right here. So that level is 52, 16, 25. 16, 25. And we'll be on the right. So it's a Wednesday BM high right there. See that? So basically we have Wednesday went high. As soon as it break level, it rate the liquidity, it pull back right away. That's the reason why we have a very high property setup right there. Yeah, let's document this setup. Beautiful. So we will sell stop right there. Short 930. Oh, what happened? We cannot take a screenshot. What happened? Why does it not allow us to take the screenshot? Very strange. Let's move into different monitor. See, because we do the recording right there. That may be the reason. Okay, I think because we do the recording on this monitor, that's which why it doesn't allow us to check the screenshot. But anyway, we moved to different monitor, so we have it now. Okay, let's do annotation on this. Let's add it. So right here we have this setup beautifully. We have let's put the annotation right here. So basically we have the ICT Udar swing at, not at, but prior 0930 setup, and that is model, what model we see in there, I think it's model 211. Man, beautiful. Give lots of credit to ICT. It worked perfectly. And we have a condition, right? We have the condition that ICT lists is it did rate the London, right? London high will rate it. And what else we have? We have a Wednesday BM high also rated, so two confluent right there. And then we have the PPI data release at 8:30 right there. So we have three conditions. Yeah, so we can sort at 8:30 right there. Yeah, 8:30 or not 9:30. Okay, so we misspoke. So we'll do a salsa at 5216, which is Wednesday PM high, and we target the low right here. So we target the low like and entry time, yeah, it's 9:30. Let's see how much risk reward we have. Let's go back to the chart. What is this one? Hold on. All right, we just add one more annotation in here. It's the risk reward ratio right there. So basically, if we go in build a sell stop at Wednesday PM high, then we're gonna target the London low, which is at around this level for high time frame, the daily time frame right there at 51.93. We have roughly $20 right there. So it's a 1-to-4 risk to reward ratio right there. Very beautiful trade. So we go in at 9:30 right there. So let's wrap this up right there. The gen color, yeah, look much better. All right, let's save it. This one. Let's save this one so we have a reference. Yeah, save this one for today. ICT model 211 Udar swing. Fire 0930. Yep. short setup. Today is April 11, and it is Thursday. Perfect. It happened Thursday. Perfect right there. Yeah, that's the trade make. By the way, we catch this trade. All right, when we miss that, we observe, we see the level right here is a balanced price range. If you trick this level right here, a balanced price range, 51.86, and we did take the screenshot of that. Let's see. Where is our oh well, yeah, not actually, is a inverse Fibonacci graph, right? Gap down, gap up, right there as this level. Yeah, actually it's not. If at this level 51.86, it will be a inverse Fibonacci graph. However, if we look closely, I think we mix, we label is incorrect right there. Basically, for the level 51.86, it's inverse. But if for the level 51.82 is a balanced price range, you see that here level, the gap down right there, and huge the gap up right there right away, and it retests that balanced price range right there. Let's look review again. Here's the balanced price range between two candles. Is balance the gap down, gap up right away, and it retests. So it depends on level, and also right here is the inversion Fibonacci gap. So if we look at the chart, this level is gonna fit into the inverse. Right here, we have to point to that level. It's a we need to fix this right there. Yep. But anyway, we entry perfectly at 10:20, and we exit right here. I think we exit too early, but you know, that is where the experience coming. We need to practice more so we can stay with the trade and let the winner run, longer. That's the idea. That's the lesson we learned for today. Basically, we exit early right here. So we exit right here. We exit at 11:25. So it's around 1 hour. So we go in right here and get extra there. However, if we stay in the trade, we have a huge profits. If we have huge profit run, but for the novice like us, it takes more practice to stay in the trade. It's much easier said than done when say let your profit run, because it's just so again the human nature. We just see the profit, we want to cut it short the winner and get the profits. But that is not a formula for profitable. The profitable trader, we have to let our winner run. So basically, the bottom line that we need to practice more. You see, that's the hue right there. We missed the hue run right here. Actually, our first target is right here. As soon as we saw this setup, balance, price range retest, we know that it's gonna rate the buy side up here. And it did. We take the screenshot right here. At the hour 13, it did rate right there. But you know, we got a little bit nervous, little bit discomfort. So when we see the down move, we just exit the trade too early. and it have a heel run right there. So initial target is at this buy sell liquidity. But anyway, we exit early, so we leave a huge money on the table. Worse than that, if we go back to the chart, you can see it run after the right here, this move, it make another heel run right here on the quarter 2 in the PM right there. So we missed the heel run right there. We get in a perfect entry, but we make a errors that we don't stay with our trade long enough to squeeze out all the profit that the market offered to us. So that's a huge lesson learned for it right there. One more thing we want to cover before we wrap this up is it's the idea of quarter theory, IDMS. Okay, right here. So the quarter theory works so work very perfect for this week. To look right here. Let's remove this for now. So you have a Monday right here, right here. So accumulation, and then Tuesday is manipulation, and then it's distribution. So Tuesday is manipulation move, and then Wednesday is a distribution, and then so IDMX. Let's recap this again. So we have Monday accumulation, and then Tuesday is a manipulation right here. You see the manipulation right there, and then boom, distribution to the outside. And then Thursday is the Q4. Q4 is either continuation, or it's gonna reverse. In this case, it's reverse. That's a beautiful, concept to get right there. And it played perfectly on the day after CPI. So we have basically Monday is Q1, and then Tuesday Q2. So that's how we play out. So basically we have Q1 Monday is accumulation, and we see the manipulation happen on Tuesday, and then we see the distribution on Wednesday, and then we see Thursday it's gonna be X. X can be reversal or continuation. In today or in this week is a reversal. Wow. So it gives a beautiful framework to work around and see how the market works. Yeah, if we look at the weekly, we see that Monday, right, is a consolidation, and Tuesday is manipulation up a little here, and then on Wednesday is the distribution, and then on Thursday is reversal. Which worked perfectly. That's the thing that we discovered today. Anyway, we run out of time. We gotta get out of here. So really thank you for your time and interest. We always grateful for this opportunity. And we do what we love, then success is coming to our way. Bye for now, and have a great evening.